Good afternoon, ladies and gentlemen. I'm Colin Burks. I'm a senior health specialist at Art Jetter and Company, and welcome to today's webinar. As a lot of you may know, Medicare is a topic that affects millions across the nation, so knowing the ins and outs of one of the largest lines of insurance is beneficial for any agent. In a minute, I'll be handing it off to Patrick, but before we proceed, I would like to highlight that Art Jetter and Company offers free E&O insurance for any carriers that our agents get contracted with Art Jetter and Company. One of the many benefits of working alongside your friends at Art Jetter and Company. If you have any questions on our E&O insurance or any other benefits of working with us, please contact your senior health specialist or call 800-228-0008 and ask for a senior health insurance specialist. If anyone has any questions during this webinar, we encourage you to use the questions box. We will try to periodically stop, but this is going to be a fairly quick webinar, so if we could try to hold those towards the end, that would be best. So without further ado, let's get this webinar started, and thank you for your business.
All right, thank you, Colin, and good afternoon or good morning to everyone. My name is Patrick Hackman. I am the Associate Sales Manager for Mutual of Omaha, and I work alongside Colin in Art Jetter's office to be able to really give you an opportunity to learn a little bit more about Mutual of Omaha. Specifically today, we're going to talk about our Plan G and our Plan N. My contact information is here as well at the bottom, as you can see. Just give you an opportunity to, if you need anything specifically, questions, along with Colin and the team there at Art Jetter, I'm also available as well. It's typically pretty easy to get in touch with me via email and everything. So I really want to take some time today to really talk to you about the Mutual of Omaha. If you, maybe some of you, of course, I'm sure a lot of you've heard of us, but maybe if not, especially if you're a new person, I really want to take some time to go into, why Mutual of Omaha. We'll talk about the Plan G. We'll talk about, of course, Plan N, best fit, and really want to close out today with some marketing and rewards. And as we go through this, I'll try to add some commentary around the slides as well, just so you understand a little bit more depth about who we are as a company, what we offer as a carrier, and why Mutual of Omaha would be the best fit for your clients today as you get ready to go out and you're doing adding this to your portfolio. So when you really see it here, Mutual of Omaha this month, well, not this month, it's April now, excuse me, but in March, actually, March 5th, I believe it was, we celebrated our 115th year as a company. We were founded back in 1909. Our recent ratings have recently came out. The AM Best company, Moody's Investor Service, and S&P Global, all giving us A+ ratings and an A1 rating for Moody's Investor Services, which is really important to us. We've been in the Medicare supplement business for over 57 years now. Mutual is the second largest Med Sup provider in the country, and we have a strong book that actually is consistently growing year over year, which we're excited about that. And I really believe a lot of that just really comes down to, the stability that we've had and what we had over the last, like as I mentioned, 100 years or so in the brand recognition. If anybody familiar with, the Wild Kingdom days, I say the days because it started a long time ago, but really those days are still relevant. There was a brief moment in time where we went from national television and we moved over to online for the show Mutual of Omaha Wild Kingdom. But back in October 2023, we actually brought that back to NBC. Now you can catch that, you or your clients can catch that on NBC on Saturday mornings, I believe at 9 a.m. Central Time. So we're really strong as we've ever been. And we're excited about that because what really makes Mutual of Omaha unique in a sense is that we're here for our customers. We want to be here. We're a mutual company, hence the name Mutual of Omaha. We are actually owned by our policyholders, which gives us a requirement, an obligation to make sure we position ourselves as best as possible when it comes to make sure we can meet our financial obligations for their clients, making sure those claims are paid and things like that. And that's a big deal, because we're not focused on Wall Street numbers and quarterly reports and stock prices and things like that, like some other competitors. The reason a lot of that, so that allows us to really be able to take a long-term view. At any given day, you can kind of look on the news and see different things going on in the health industry. And sometimes you may see some other carriers on there, their stock prices or something like that could be taking a hit. And you wonder how that affects their business, so especially for those customers, that's not something that Mutual of Omaha has to really deal with. So it really makes a difference in how we choose and how we actually, set up our decision making and making sure that we position. So that 57-year-old history that I mentioned in the Medicare supplement space is strong for a lot of reasons. And that's the reason why we've been able to stay stable for as long as we have been, because we owe it to our policyholders. So when we start to think about Medicare supplement plans, there's a lot of different plans out there. Is this graph, I just pulled this kind of off the Medicare.gov site, but it's kind of a good visual for you to really see at one glance what all is covered with these actual plans. And the reason I like this is because I try to make things as simple as possible in the sense of a graph. So because we're talking about Plan G and Plan N, I decided to add two arrows at the top there where you can see and really start to highlight exactly what's the differences between the two. So what you see on the screen, you say, well, Patrick, there's not a lot of differences. And you're right, there's not a lot of differences. However, one key difference is really two key differences that I'll point out as well. If you see my fine print to the bottom left there, is the excess charges and copays. And the excess charges on the Part B that's covered on Part G currently right now is not covered on the Part N. So in simplest terms, as you can think, you say, well, what's the biggest difference between the Plan G and Plan N? Well, it's a lot of it's going to be comes down to those excess charges. And those excess charges that you see there can make a big role in the decision making of someone when you're sitting down in front of them and trying to help them understand which plan is actually the best plan for them. So that's one easy way to kind of look and visualize the differences is. But the key thing also is that, like, what if you're hearing excess charges for the first times, or maybe you hearing it, or even your clients, they probably definitely don't know because they're relying on you to give them that information. What are they? So, if you think about an excess charge, if that's the difference, is the biggest one of the biggest differences between the N and the G, it's important for us to really know what those are. So when you look at the Part B excess charges, those are calculated based on the Medicare approved amount. So the excess charges is an amount that a provider can charge over the Medicare approved amount. So anything over and above what Medicare has approved is what they call an excess charge. So, and if it's gonna be an additional charge from that healthcare provider that doesn't accept Medicare assignment. And that's key, because when I say doesn't accept Medicare assignment, what I'm saying is maybe they accept Medicare patients, but they don't accept Medicare assignment. Then that gives them the potential that they can actually charge up to 15% in excess charges. Now, the good thing about that, and you can say, well, hold on, wait a minute, what does that mean? The one good thing about that is that research has shown now up to roughly 98% of providers across the country do accept Medicare assignment. So the chances of you running into a situation where you see someone that doesn't accept that is going to be very, very rare, but there is still a small chance. So Medicare assignment, if you're working with someone and you have that Medicare assignment and it basically saying, this is a good definition here, the provider agrees to charge no more than an approved amount. So they're basically saying they're not going to charge you over and above that amount that is approved by Medicare, which is a good thing. And as I said, that's my stat there. CMS reported that 98% of Medicare providers do accept assignments. So the chances are that you're going to run into this with your clients. It's very, very low. Doesn't mean it won't happen, but it's very, very low, which should really give you as an agent more peace of mind and more confidence on being able to present the Plan N, because Plan N, unlike the G, is the one that actually does not cover the excess charges that I just mentioned there. So once what's one another thing to look at is the actual excess charges is what's a very good diagram, and I hope this is a diagram and makes sense. So let's just say, for example, that a part of that 2%, we mentioned the 2%, let's just say that that 2% provider, where you run into someone that doesn't accept Medicare assignment and that they can potentially charge those excess service charges for services under Plan Part B. Here's kind of what it would look like. So let's say in this example, you know, if you went out and you had a medical procedure, you or your client, and there was a medical procedure done, so say with a dermatologist, for example, to remove a, we'll say like a sunspot. Let's assume that the approved amount, the approved Medicare amount was $250. That healthcare provider, because they do not accept assignments, could potentially charge excess charges on that amount. So therefore, if it's the approved amount of 250, and then Medicare comes in and say, well, we do accept Medicare, we're going to pay 80% of that, which is the $200 that you see. Then that leaves a $50 or 20% responsible to the beneficiary amount. But again, because this particular provider does not accept Medicare assignment, there's potential up to 15% express, it says express charges here, but express charges or excess charges that can be charged of $37.50. In total, in that scenario, the Medicare approved amount of 250, then Medicare comes in and pays 200, the beneficiary responsible for 50, along with the extra charge, leaves them walking away paying a total of $87.50. So $87.50 that beneficiary would then have to play in that scenario. So how do you avoid this? Well, if you avoid it two ways, you could avoid it by, a plan G, because this wouldn't apply for plan G. But in the event that you do have a plan in and you go into someone, making sure that you can go to a provider that does actually accept Medicare assignment, it will eliminate the scenario. So again, 98%, we know 98% of the folks that do not, that do actually accept this, that accept the assignment, chances of running into this is going to be very, very slim, but it's still possible. So plan G and plan N. So I mentioned two big differences. The two big differences between an excess charges with plan N versus no excess charges with plan G. Another big difference is that when you're looking at a plan N versus a plan G are the copays. There are copays on or associated with a plan N. The benefit, that's which is the cost that the beneficiary pays after they've met their Part B deductible. So once that Part B deductible has been taken care of, and what happens is there's still potential where a copay will apply for a plan in, which is usually up to $20 for office visits and up to $50 for emergency room visits. Whereas if you're selecting and you're going with someone that actually has a plan G, then there's no copays at all. So that's something to look into. I always let people know a good resource to go out and take a look at, these things like Medicare assignment, what percentages are covered, things like that. You can always go to medicare.gov, type in on that website, you can type in, that provider's name to see, number one, if they're, they accept Medicare, of course, and then also making sure and seeing if they accept Medicare assignment as well. That's the easy way to go out there and find out exactly who accepts that versus who doesn't. So Medicare.gov is a good resource for that. So let's talk about Mutual of Omaha and where we actually are available. So Mutual of Omaha, we're available in all 50 states. So we're available in all 50 states. As you can see here, it's kind of color coded. So I want to make sure I put some slow down and make sure I'll give you a little bit of background on this. So no matter what state you're on, and I know there's a lot of folks on the call, we are available in every state except for Massachusetts, which you can see at the kind of top right corner there. But the colors represent our different underwriting companies. So a question I usually get sometimes is, Patrick, if I'm in Texas, and I'm going to sell Mutual of Omaha, you know, but I'm also licensed in California, where you see in this graph, in California, you have United World Life Insurance Company versus Texas, you have Mutual of Omaha Insurance Company. Do I have to be sending separate contracting for each one? And the answer to that is no. So once you get contracted with one of those, and Colin and the team at Art Jetter can help you with that and verify everything you need for contracting questions. But once you get contracted for one, that applies for all. So it doesn't matter what state you're in or what underwriting company Mutual shows up in across the country. Once you're contracted for one, you're contracted for all. That's the way we set it up. But as you can see here, you see our plan A's, F, G, and N available all across the country, and with plan and household discount availability as well. So we're out there and we're available everywhere across the country, like I said, except for Massachusetts. So when we look at the actual two plans again, what are some benefits? I talked about the medical side of things, but what are some under benefits to actually the G versus the N or vice versa? You know, Premiums, which are a big deal for our beneficiaries, right, and your prospects, premiums are usually lower, anywhere from $20 to $50 a month for Plan N, which you'll see. I think that, Plan N could be a good fit for any of those folks that's willing to cost share. And the reason I use the word cost share is I'm referring to, the copay. So if you have someone that's very healthy, they're healthy, they don't go to the doctor quite often, you know, saving, 20 to 50, and sometimes it could be even more, $20 to $50 a month on a premium, but being able to accept and take on some of those copays that I mentioned on the few slides earlier could actually be, a better fit for them, especially if they're not going to the doctor quite often. Versus with Plan G, these are going to be considered for those folks who probably, maybe they do go to the doctor a lot more often. Maybe they do go to quite often. So those co-pays and things like that could be running into a situation to where it could get a lot more, honestly, it get a lot more expensive, and it may not be worth it. And the other way I like to look at Plan G is it is best for all around coverage. So, you're not that peace of mind of being able to go out there and know that, when they walk into someone that accepts Medicare, that they're going to walk away and they know that they're fully covered outside of that Part B deductible, and they're not going to have much worry about that at all, about the coverages and things like that. And so it's really going to come down to there. I don't think there's a right or wrong answer. I really think you just have to really think about the prospect that you're dealing with, what their actual situation is, what it looks like. Again, if someone that's going in and out of the doctor on a more regular basis, maybe Plan G could be the best fit. If they, but maybe, they're saying, what, I'd rather take, pay less money on the back end, on the front end, right? Maybe I want to let a lesser premium. And, I'm willing to pay the $20 at the office visits, or, if I have an emergency room visit, being able to pay that $50 copay and things like that. So it really comes down to that person. I think for an agent, it's just important to understand those biggest differences where we mentioned the excess charges versus the actual copays, and then coming down and figuring out, okay, what's going to fit the prospect and what makes most sense for them in the long run. Because the other thing that's not on the slide that I'll mention too is if you think long term, you start to think about, okay, they're going to get a premium increase, right? At some point, there's no way to avoid it, whether it's a G or whether it's N, at some point over time, people are going to see premium increases. And what we've seen historically is that Plan N premium increases tend to be a little bit less, and I don't have an actual percentage or anything like that, but they tend to be a little bit less on the Plan N than they do versus a Plan G. So that's something else to think about as well when you deciding, which plan to put one of your prospects that you're working with. So here's a map. I won't call it a heat map because it's blue, which is a good thing for us, and I'll explain why. So if you're looking at, a Plan G, for example, and you're looking at a Plan G for a 65-year-old female, non-tobacco with a household discount, what the blue represents is how competitive Mutual of Omaha is across the board amongst our major competitors. And I won't name those competitors, but some of our biggest competitors, you guys will do this a lot on a day-to-day basis. You probably know that without me even having to say it. But, when you look across the board, where's Mutual competitive? I mentioned us being a strong and stable company in the beginning, but we're also competitive. We try to keep ourselves competitive. There's some spots in here that are not so competitive. So if you look over to the right here, the legend, the darkest blue, what that does is represent, where we're the least expensive in most cases. And as that blue starts to lighten up a little bit, you see $0 to $5, and then it lighten it up a little bit more. It's $6 to $10. And what that's doing is basically giving you an opportunity to say, okay, if you're looking at your state, wherever state you reside, you're looking at putting someone in Mutual of Omaha plan, where is a best fit? Where are we actually the most competitive? And maybe even work on kind of a prospecting plan to focus on those key areas on where we're most competitive, which I'll share here shortly as well. So that's a plan G. Now I want you to pay close attention and get a kind of a visual lock on, where we're at, what the area looks like, and watch what happens when I switch over to the next slide. Now you see even more blue. You see even more blue, and the only difference here is we also now have our plan in. So this is for same scenario. The previous slide was a plan G. This is a plan in. So a plan in, 65-year-old female, non-tobacco with a household discount. You can see Mutual is very, very, very competitive. So, I would love to see, us continue to just stay this way, which I feel really, really confident what we are. As you can see, these numbers are March 2024. I'll have a new map here in about a week or so that'll show our April rates as well, which I don't see changing too much. But we're very, very competitive across the country in our planning as well. So again, for those prospects that you're considering, you're marketing to, and you're thinking about the plan in versus the plan G, Mutual of Omaha is a great option to help them save even more just because we're so competitive. And we have tools. One of the unique things about this for us is that we have a lot of tools, that we provide, and we try to make sure that we give you all an opportunity to have, at your fingertips, really. And, so there's a lot of Medicare supplement helpful materials out there, point of sale materials that can be found. Our sales support team can help you with, but I would encourage everybody, take a look at our Medicare Solutions product portfolio. It gives you all of this information that I just covered, but also, we have consumer brochures. Our e-app storefront is a big one for us. So if you haven't seen that, going out in our e-app storefront through our sales professional access, it really gives you an opportunity to go in and through the e-app storefront, it gives you an opportunity to see how we've streamlined the broker experience through our e-apps as well. We have a new feature out there as well that actually allows you to, on our spa, to download your book of business. So if you are, an independent agent here, you can go out and you can download your book of business and get an idea of where all your clients are at one place just from one download. And then the Medicare supplement underwriting guide. This is something that I'm a big fan of. I always try to make sure that we keep one on hand because there's information in there, of course, that sometimes if you don't touch it on a day-to-day basis, you forget. So it's always handy to have a underwriting guide with you as well, which we have available out there on our site as well. And speaking of underwriting, some new information here. We've consistently improved and tried to improve our e-app experience through that e-app storefront that I mentioned, and that's helped us reach a point where 96% of our auto decisions are made within 180 seconds, and then 90% are made within 50 seconds. So that's very, very fast. So, you come in and you get the questions answered right way and go through there, we can get you a decision on one of your prospects pretty quickly. And this is something that we're actually doing as well through the month of July, is our marketing program, our MedSup and Dental Marketing Credits program. What this allows you to do, and this gives you an opportunity to, with the minimum of 7 issued Medicare supplement and dental applications in each month, you can earn marketing credits based on, that you can actually use for different promotional items. A lot of agents I've talked to, they really enjoy, being able to get some marketing credits. It's 1% of MedSup and/or dental AMBP, which is annual new business premium. So you get 1% that'll automatically get calculated into your balance there, and you can go in at any time at mutualofomaha.com broker in our sales and marketing section and really find out how many marketing credits that you have. And you earn those, and then it gives you an opportunity to use those for other things, promotional items as well, which tend to be pretty helpful if you're sending out goodies and stuff around AEP time. So earlier I mentioned and I talked about our Mets up and ways to look at that map. So that big blue map and colorful map that I showed is something else that we can work with you through our sales support. Is we have actual Mets up flyer rates with flyers out there with the rates listed. So what you could actually do is you can go out and you can call in, you can order some of these flyers, and they can be customized with your name and your phone number information on there. Down the bottom right, you see mine. You can actually get it customized with your name and information on there. And what's unique about it is if you look to the left, when you fill this out in order form, you see how it says the zip codes beginning with, you can actually select. So you can take the first three digits of a zip code. You can put in different ages. So in this example, I have 65, 66, and 67. And then I'm choosing plan G and plan N. And what it will actually do is it will actually kick out and generate an estimated or sample base rated premium for plan G and plan N, what that monthly premium could look like. And even in this example, you can see the differences between here in Nebraska, a plan G cost versus a plan N cost that allows you to be able to send this out. And you can send this out, obviously as a prospecting item, and how you prospect yourself to give you an idea to be able to go out there and get that done as well. So our sales support team can help you out with those orders. You can do that and get that information as well to give you an opportunity to make sure that you're ready to go. Something else that's brand new that we just recently launched is our personalized URL. We're really excited about that. We just made some enhancements to it over the last week here to streamline and make some of the follow-up emails and things like that a little even better. But basically, when you go out to our sales professional access and you log into the storefront, you're going to be taken to a screen, your senior health dashboard. And to the left of that, right, is if you're going to start an application, you see CF eApp links. What that stands for is, consumer facing eApp links. And when you click on that button, what it does is it pops up the screen that you see below it, and it gives you two different links. You get a link for Medicare supplement, but you also get a link for our individual dental. And what you can do from those links is you can actually click the buttons that says copy, and you can email that link out to prospects, and they can take that link and copy and paste it into a browser, and they can pull up and they can actually, through your information, it'll have your information, and you can actually go out and they can actually self-enroll themselves in a Medicare supplement or a dental plan. And as long as they're using that link that you sent them, you will get credited that for that application, and making sure you get credit for that app as it comes through, whether it be dental or MedSup. So we just recently launched that. We're really excited about it. Something else that we do to try to make sure we're enhancing the broker experience for you all and consistently getting better. So another program that we have, we now have is, our MedSup broker bonus program. This is now and through June 30th, and I know this is a lot to see, but essentially what it's saying to you is whether it be plans F or plan G and N, those that qualify for F, I know that's kind of a little bit going away now, but, essentially for every issued underwritten application that comes in, we are paying 150 cash for that. And if it's an open enrollment business, it's $30. So with a minimum of 5 policies issued in a month, you can earn extra cash through our broker bonus program by just placing that underwritten business with us, or the open enrollment business with us as well. It's another way for us to say thank you for doing business with Mutual of Omaha, and hopefully give you some momentum and some extra cash in your pocket, but momentum throughout the summer as you get ready and get repped up for AEP that'll be coming in the fall time. So that bonus right now is going and running through June 30th, 2024. So there's still time to get 5 apps issued in a month and be able to qualify for some extra cash through using that bonus as well. So really excited about that. The other thing I mentioned, when I talk about Mutual of Omaha and our brand is, we really love celebrating people. We love helping people create memories. And one way we do that is we do it through making sure and trying to put on beautiful, fantastic incentive trips. And our incentive trip for next year in 2025, so is going to be a trip to Ireland. We actually have for folks that qualified last year in 2023 that qualified for our trip this year. They're actually in Barcelona, Spain right now as we speak. But next year it's going to be in Ireland. So the qualifications for that for 2024 mutual sales leaders, is qualification started on January 1st through December 31st of 2024. The minimum production requirement is 250,000 production requirements, and you get production credit for Medicare supplement and dental and vision, and then it's half credit for any internal or affiliate replacements as well. But yeah, that's something that we're really excited about to be able to bring to everyone. We take a lot of pride in taking people and celebrating and helping them create memories through all the hard work that they put in with throughout the year. So that's something that we're really always excited to announce and let people know. So with that said, I want to say thank you for your business. Thank you for your time and attention today. I did see one question, I believe, that came up in the chat, but I'll pass it back to you, Colin, for anyone that I might miss.
Yeah, great job, by the way. And then I do want to let everybody in here know, if you look in the handouts, there is a Plan N and Plan G flyer. It's only 2 pages, so you can download it or you can print it off, show that off to your clients. Might help them decide which plan is going to fit them the best there. And then I'm going to go to the questions here. Do you by chance know how many surgeons accept Medicare assignment?
Ooh, that's a good question. I honestly not certain. I'm not sure about that, Colin. I will be happy to look that up, just for my own information, honestly, to know as well. But I don't by any chance have a number that But again, I would say, like I said, if and maybe surgeons apply. I guess I never thought about that being so specific, but Medicare.gov is a good place to be able to go out there. I know you can go out there. I've done it, and you type in, and there's an option for you to be able to find the local folks. If you have the name and information for surgeon for a specific one, I would hope that there's an option for it tells you if they actually accept the assignment.
Absolutely. And then here I have one more for you.
Sure.
It's about the Plan N. Does copays go towards the $250 deductible, and is copays a fixed price?
The copays, to my understanding, they are a fixed price. It'd be $20 for the office visits and $50 for that. But I don't believe that they actually are included in with the deductible. I think you have to meet deductible first, and then it's when that comes in. But I can double check on that for sure. Be sure for us. Good question.
All right. And then another question that just came in here. Can existing clients switch from Plan G to Plan N and vice versa?
That's a good question. So they can switch. However, they would have to go through underwriting, unless it's a situation to where, because now these days, and this is where I would recommend the underwriting guide, is because some states have now the birthday rules where it's kind of an open enrollment or birthday state, whichever terminology you choose to use. So, and if it's one of those situations where it may be a special state that they can actually get in to, say for in this example, go from G to N without going through underwriting. But in most cases they can switch. However, they will have to go through underwriting. So my recommendation there would just be to check the state rule.
Perfect. That sounds great. I think we are all finished out. here with our webinar here. Thank you so much for being here, Patrick. Great information. If any of you guys think of any other questions after the webinar, please reach out to your specialist. You can reach out to either seniorhealth@jetter.com or call the number here on the screen. Or like I said, if you have your dedicated specialist, reach out to them. Thank you so much for being here. Thank you for your business, and we'll talk to you all soon.
Thanks, Colin.